hear me?
Hello, everyone. Welcome to our weekly installment of our Women in Money series. My name is Jan Mercer-Doms. I'm the Vice President of U.S. Development with Mayshad Choice. We have an incredibly enriching program for you today. Today's theme is all things related to innovation, investment, and brand survival post-COVID-19. We're especially excited about this conversation because it's going to be very future forward focused, talking about the ways in which brands can and will survive post-COVID-19 and investment opportunities and strategies going forward as well, and how all of that interrelates as we create a new world together. I would like to introduce Neza Alaoui, Mayshad Choice's founder and CEO. Neza.
Thank you, Jan. Hello, I'm the founder, as you said, of Mayshad Choice, and Mayshad Choice is a company that is committed to empowering women on a daily basis. So with my team, we produce content, events, and workshops to advance women's business development. And we offer a networking platform for women to connect to a resourceful tribe who share the same values.
Thank you, Neza. We invite everyone to comment and leave questions during the course of the show. We will host a Q&A at the end of the show. We also invite you to subscribe to our YouTube channel so you can stay up to date with all the programming that we run on a weekly basis, from our Women in Money series, which is what you're a part of today, to our Diversity, Equity, and Inclusion series. We also do events just for women to come together with cocktails at the end of the day to share experiences and challenges and set up the week and end the week for success, as well as a workshop series that we just launched this week. So please do visit joinmayshad.com and subscribe to your YouTube channel. Now we'd like to introduce our guests. Today we have Dr. Joanna Dodd Massey, a communications executive and brand reputation strategist. She is the president and CEO of GDMA, sorry, Joanna, and advises teams at Fortune 500 companies, startups, and nonprofits. She is the author of Culture Shock, Surviving 5 Generations in One Workplace. She's an adjunct professor at Columbia University and a venture capitalist, where she previously was the managing director at Golden Seeds, which, as many of us know and love, is a female-led investment firm which has invested in over 170 female-founded startup companies. That's incredible. Welcome, Joanna. And we also have with us today Nisa Amoils. And Nisa is a venture capitalist and family office investor for over the past decade. Currently, she's a venture tech investor and partner at Grasshopper Capital. She is a media commentator, author, regular panelist on CNBC, MSNBC, Bloomberg, and many other platforms. A securities attorney, early adopter of blockchain, Nisa has also been named to the top 50 global fintech thought leaders and Business Insider's list of 30 women in VC to watch. Nisa, that's quite an accomplishment. Thank you so much for being with us today, and welcome.
Thanks for having me.
Absolutely. So, today's conversation is going to be really interesting because, as we know, there are many industries that were already shifting and going through massive seismic changes even before the pandemic started. So we see things like the sharing economy, fintech, retail, all things related to how we communicate and engage and connect with each other that were already disrupting prior to this. Today, we're going to be exploring what all that means now during and post COVID-19, particularly with that eye toward the future. Joanna, my first question is to you. How do you think, given the fact that you're an expert in all things related to advising companies on how to communicate both internal and external to their teams, where do you see the most innovation happening, and where could that happen post-COVID-19?
Thank you, Jan. I think that companies have pivoted quickly, and it's quite impressive, if you're in the right place. So, for example, I've seen companies like Pressed Juice and other juice companies that are not only instituted delivery rather quickly, but also took advantage of their main product, which is fresh fruit and vegetables, in that delivery. Then you have other companies that are offering I was recently on the phone with an entrepreneur who runs an online marketplace for beauty and wellness, and she provided business back end for these beauty companies who found a way to very quickly partner with a bank in order to facilitate PPP loans, which have been very difficult for small businesses to get. Other companies are finding that they have to, toilet paper companies, for example, you're seeing a lot on Twitter where they are having to speed up their pipeline and do direct, they've stopped direct to consumer sales because it's more important for them to go to direct to the grocery stores and to other suppliers. So we're seeing a lot of innovation and change. You've also got other companies, whether it's tech companies, startup, or that are having to pivot and to become, there are a lot of companies that were naturally already doing work from home and flex hours. And so this is not that big of a change for them. But for some other companies that had more traditional structure, this is a massive shift for them. And I think what we'll see in the future is a lot of companies that are going to be more relaxed about working from home and flex hours as and also travel, as we all realize that we can be physically distant while still being socially and businessly connected.
It's interesting, Joanna, because we often just talk about right now the logistics of how all this happens, right? Like, how are companies working from home? How are they communicating? How are they using the technologies in order to do that? And what we haven't yet had deep dive conversations about is the psychology behind this. And you are a psychologist by training. How, from your perspective, how do we take and move beyond the logistical part of the conversation and really understand from a psychological perspective what's happening during this time as it pertains to communications and communication strategies?
It's an interesting question. I'm on a COVID-19 task force for a nonprofit, and on the task force are 2 infectious disease experts. So I have a look into the future and what's coming, and I have to say it's enlightening, and it's also a little disheartening. I think that it's safe to say that despite the fact that we won't be in as restrictive of a place moving forward, that we will continue to see physical distancing guidelines in the foreseeable months, well into the fall. And that's going to have a massive effect on business. If a restaurant can only take 50% capacity, if we cannot go back to theater yet, or theaters can only take 50% capacity, how do we handle that on the MTA, especially in a city like New York, Chicago, DC, where MTA, where we're heavy use of buses and subways. So there are certain areas like that need to shift. And I can say that it really depends on the unique psychology. And so you have organizational psychology, but then you've got the human being and the individual psychology of each person that comprises the organization. So it's very unique. It's really hard to paint it with a broad brush. I think that human beings are very adaptable for the most part. And what you'll see is older generations who have been through a lot of change in their lifetime are actually able to adapt to something like this. They might not like the change, but it's something they've been through a shock of this type before. Younger generations have not. This can cause a lot of anxiety, depression. We're seeing a lot of addiction issues sort of really bubble up to the surface. People are at home, so there's been we have a report, you're seeing reports of increase in drinking, even from as much as how much wine and hard alcohol is getting ordered, so, sales going up type of thing. A lot of binge eating, all this kind of thing that gets kicked up in a massive shift like this. That's going to affect an organization. So it's incumbent on HR and on the communications directors, chiefs, and the CEOs to work together, which they always do. It's sort of a trifecta in a corporation, in order to provide support for employees, to make sure that managers and leaders are aware of what employees are going through psychologically, and to have more understanding at this time. As a professor at Columbia University, I can tell you that this semester, Columbia, as well as several other schools, we were not the only university to do this, we went to a pass-fail system instead of a graded system. Now, there are some students who objected to that, but the truth is that this is not a normal situation. And there are students who, some of whom can get online and who can do the work, but there are other students who, once they went home, they either have siblings that they have to take care of, they became the main provider for the family, or they don't have the online access that other students have or the time to do the work. and we had to balance it out somehow. I'm not a spokesperson for Columbia, by the way. I just, happen to have that information as a professor. So there's just adjustments like that companies are making. It's about pivoting, and the companies that pivot the fastest, are the ones that will survive and thrive.
Joanna, what you said is really fascinating, because we think of it from the perspective of younger generations being much more flexible and much more agile and better adapted to being in the moment and experiencing successfully what we're all going through together, because they were early adopters of technologies that our generations may not have had access to, just from the way in which we all grew up. What you're saying is really interesting, and I think that, and we'll speak about this later, a little bit later on as well, when we talk about your book, just in the sense of how companies can learn how to bring together different generations now in the workplace and come out even stronger by having that intergenerational dialogue and those learning lessons together, and the platforms for which to do that.
Exactly. And I think that you make a very good point, which is that younger generations are definitely known for being more proficient and adaptable when it comes to technology. But if you look at it from their life perspective, somebody under 30 years old, how old were they in 2008, which was 12 years ago, right? So their experience of a massive, or take somebody who's really brand new into the workforce, who's just out of college at 22, who was 10 back in 2008, their experience of a massive economic downturn was at a very different age than as a grown-up who's in the workforce trying to earn their own way.
Thank you, Joanna, for enlightening us about the psychological trends that came with this COVID-19. Nisa, you were an early investor in blockchain and those incredibly disruptive technologies like IoT, autonomy and robotics, AI, VR. What's exciting for you about these spaces now?
Absolutely. Thanks again for having me, and all those interesting insights that Joanna just put forth. I think it's a really exciting time for technology because it is being put to the test in terms of fighting the virus. And what's also interesting is that each of the technologies that you mentioned were accelerating at different rates, and now they are converging and being used together to help fight the virus. So for example, tracking, right? Tracking cases, tracking test kits, tracking supplies, supply chain disruption. All of that is being used in blockchain to facilitate the process. And then you have artificial intelligence that is being used in telemedicine, where people can be diagnosed remotely and directed to the proper hospitals nearby. So it's all about the data that's being collected and then the algorithms that are processing that data. You have drones and robotics who are doing things that are dirty, dull, and dangerous, which now accentuate on the dangerous. You can have them delivering supplies, you can have them cleaning hospital rooms, you can have them visiting people, like in a social sense, like they do in Japan. So there's all different types of use cases that in Asia, where this was experienced first, were played out, were being used. And we saw that their response to controlling the virus was, in most countries, pretty well contained as compared to the United States. So a lot of that is due to the technology that they were willing to put to use.
It's interesting what you're saying about Asia. It's true that they've gone through SARS as well in a more like drastic way than other countries. Is there any lesson to learn from their way of having handled the virus back then and COVID-19, and how they also have reacted to support the economy?
Definitely lots of lessons learned in terms of mask wearing and having that be the norm, and not having any stigma to it. I think the West was slower to adopt that. And And also the way that it particularly digital currency in China is one of their biggest initiatives. In fact, I think they're rolling it out this week, what they've been working on for 5 years in terms of how people transact and get money, their digital yuan. Money in this environment is filled with germs, right? Physical money. And so when you look at the stimulus bill from the United States, it actually initially contained a proposal for a digital dollar, which was ultimately didn't go through, but is still in other bills. And that is something that has been discussed for a long time, that this crisis has accelerated. The way that China will lead in digital currency and blockchain is something that other countries are wishing that they had invested that time and money into.
Lisa, thank you so much for that. You were an early adopter of all things related to the blockchain, and would love to get your thoughts on your experience now in this moment in time with all things that are related to the blockchain, Internet of Things, machine learning, et cetera, and what else could we learn here in the US for opportunities for entrepreneurs to really rise and shine during this time period as we create the new future?
I think it's really important for women to get on board with this. So I do a podcast called Daily Block Party, where we try and highlight women in this field. We try and get more women into it. And I also wrote the book where I interviewed 13 entrepreneurs, and a lot of them, 7 of them, I think, were blockchain entrepreneurs. And they're all women. I think it's probably the biggest wealth creation opportunity in our lifetimes. And the reason that I push women into it is that I feel like women were largely left out of the traditional tech, wealth creation, and in many areas left out in finance. And so I feel like this is an opportunity. It's probably technology that's been around in mainstream for 10 years. So that's relatively new. And there is more of an equal playing field than there are in traditional fields. So I think it's a great time for entrepreneurs to come in and observe how can they help using these technologies in terms of managing this crisis, and then also in terms of building companies that are going to be the future, like the new financial infrastructure that needs to be built, because we see that the old one had a crisis of trust. And so in terms of who we trust going forward, is it going to be governments or big companies, or is it going to be mathematical equations? And I think you'll find more people are leaning towards the latter.
Thank you, Nisa, for that really reflective insight, particularly around the ways in which entrepreneurship has failed women in the past. And, as we know, and this number may have changed, but at one point there were less than 4% of all VCs across the country were women. And Joanna and Nisa, you both have experience as investors, and you may have invested in some of those verticals where now we've seen a seismic shift in just how they do business, how they generate revenue. So we think of, everything from co-working companies to companies where you can actually share clothes with each other to other what at the time seemed to be very innovative, fast-growing, fast appealing companies, where now business is not so much as the way that it was for obvious reasons. Do you think that for these female founders that have built companies that did rise very quickly, how can we encourage women to stay in both as investors and funders when many of us may have been burned in the most recent past? Joanna, I'll let you answer that first, and then Nisa, feel free to chime in.
Thank you, and thank you, Nisa, for those really fascinating insights. I think that I don't know that it's a female thing only, a male-female thing but at times like this, the pipeline for investment is going to dry up a little bit. It's just a given, especially in angel investing, which is the area where I am, because with angel investing, you know, essentially the entrepreneur does what we call bootstrapping, which is put their own money into as much as they can into the business. Then they do a friends and family round, which is going to everybody you know and asking for, you know, some help with the business. And then you come to angel. And angel is the earliest outside investor, you know, professional investor for the most part. And we're at what's called seed stage. And in seed stage, you know, we are the investors with the longest time horizon. When we go into a company, we're looking at a 7 to 10 year horizon before we get our money back. And we know that. And a lot of the numbers that we're looking at are really, they're made up. They're guesses, they're projections. But there's the highest amount of risk that you have as an investor is at seed stage. So you will see the pipeline in the angel world dry up a little bit for those who have lost significant amount of money right now and need to pull back. However, other people who have an appetite for risk, and quite frankly, that's code for who have the money to take the risk, at this point, will probably be, will still be in the market, no question. I think that what you're going to see is certainly technology will thrive during this period, as we were just talking about. But whether it's business to business or business to consumer, you're really going to need to see projections address the long-term viability of the business and to adjust for this period, and to take into account decreased spending power, decreased availability of advertising. There's not a lot of advertising happening right now. D2C, which is direct to consumer, they're already, you know, those are already businesses that operated with thin margins, and they're having a hard time getting through now directly to the consumer. And so I think that anyone who's in a line that has to do with, in my vision of it, technology and consumer staples, right? Something that you need, packaged products, baby products, toilet paper, they're going to fare better than something that's more along the lines of fashion, sports equipment, things like that, that just aren't being heavily used right now. Interestingly, I do want to say I think that the beauty category will continue to do well. I don't know if anyone's tried to buy hair dye recently, but it is hard to find as Lysol wipes. So at-home beauty is actually thriving right now.
Yeah, no, I agree with all of that. I wrote an article for Forbes called Funding in the Time of Coronavirus. And that is very true what Joanna says about angel investing. For venture, which is a little bit later stage, you know, there are probably the best performing funds came out of the prior two recessions. So it's a great time for venture investing. You are, the valuations drop, more of the negotiation leverage goes towards the investor versus the entrepreneurs. And you end up in the long run probably with better returns. And again, because I'm investing in these technologies that are the future, I see it as a good opportunity to continue to do so.
Yeah. Nisa, thank you. Sorry, we had a technical bug. What is your own philosophy during those times in terms of investment? Are you, as you've been an angel investor yourself, are you still watching the trends, or do you feel already confident to start prospecting in terms of investments?
Yes, I'm watching the trends, and my fund is actively still investing. Most of the other funds that I speak to, if they've already raised capital, have to deploy it. It might happen at a slower rate, but it is still happening.
Okay, and what about investing in healthcare? Do you feel that funds who are not specialized in investing in healthcare could take the risk right now to shift into that direction? Are there any opportunities there, or do you think that everyone should stay, even in these times where they are specialized and where they should stay, even if they are specialized in industries that are right now, like hospitality or travel, that are right now completely blocked.
Yeah, no, it's hard to just overnight go to be a biotech investor when you don't have that background. But there are a lot of tangential industries, like I was mentioning. Telemedicine is using artificial intelligence to work. That's an area of investment that will increase. So, you're not going to suddenly overnight go into, investing in the right vaccination if you don't know anything about it.
Thank you, Nisa. Joanna, when we talk about social distancing, what are some of the creative things that, sorry, I'm just looking on my questions. So yes, so you've written about the effects of how we talk about social distancing. When instead we talk about physical distancing versus social connecting, what will this mean for us in the new world and work of life? Once we're ready to be let out, do you think that things will just go to normal right away?
I think it's fair to say, and I had mentioned, as I mentioned earlier, that I'm on this COVID-19 task force with these two infectious disease experts. And from what I'm hearing, and obviously we're seeing in the news that the governors of many states, as well as the federal government, they're really interested in getting the economy going again. I think that we can expect that we're going to try to gear back up soon. But we're still in the height of this. So I think that physical distancing to a certain extent will need to continue for many, many more months. I don't think we're going to see a return to normalcy based on what I'm hearing from these experts on this task force. I don't think we're going to see a return to normalcy till the end of the year or maybe early of 2021. Meaning normal as we knew it. And so what I think and also people adapt. Human beings are highly adaptable, we're adjusting to this different work style. So what I think we'll see is a lot more virtual meetings continuing, less corporate travel, but also what you have to keep in mind from a company perspective is, and as I've written about with the, different generations in the workforce, how do you keep your corporate culture going? How do you keep your team cohesive? And I think that we're seeing a lot of really innovative things in that area. I've seen on Twitter and on LinkedIn, teams that get together every morning at 8:30 for the morning check-in call, and they're all wearing costumes or they're all wearing funny hats, things that really kind of help with team bonding. And I know other bosses who are holding quarantini parties, with their staffs, where they can bring in their significant others and their kids, and they sort of sit on Zoom for an hour and have a cocktail hour together at the end of the workday. So things that we would have normally done in person that we are able to do virtually now, thanks to technology. And so I think that's going to be a huge shift. And then additionally, companies were already headed toward communicating with their staffs virtually, but the virtual town hall with the CEO, and bringing in corporate speakers and continuing with those corporate speakers, that employee engagement, that employee education, but doing it virtually will all continue and will return back to normal, but maybe not in all of us sitting in a massive conference room, hall with 50, 100, 5,000 people.
Joanna, it's interesting because everything you're describing now is a strong indication that the balance between life and work becomes even more blurry from the perspective of we don't have to sit in an office every day now, Monday through Friday. And as we think through the positives of exactly what you said around, the quarantini parties with employees being able to bring their families and their significant others and spouses to the screen as well, that's amazing in the sense that it really creates so much more cohesiveness in the sense of how employers think about the ways in which they build their corporate culture and who's included in those conversations and who's a part of that culture, right? So it almost the company becomes an extended family in a way. I'm wondering also, though, on the other hand, there was so much research that was done just from indications of the physical and emotional and mental toll technology can take on our own sanity and our own health if we're on devices too much, or just the effects of having devices around us at the dinner table or in restaurants, or et cetera, et cetera. In this moment in time, and then going forward, from a communications perspective and from how we relate to each other, what do we need to be aware of? And I would love your input and advice on that.
Sure, and you bring up an excellent point, which is definitely like we still have to have work-life boundaries, and that is extremely hard to do when your work life is your home. So, for example, I mentor a lot of women, especially millennial and Gen Z age, and one of them is a management consultant at one of the big 4 accounting firms, and she is working 15 hours a day on Zoom from 7 in the morning till 7 and 8, 9, and then doing more work at night. And it just feels nonstop. And it was going on for weeks and weeks. And she had to set a boundary with her bosses and say, this can't continue. Now, the company had also simultaneously recognized what was happening with its employees and started to let management know that they did need to make sure that employees were being given space. So that work-life boundaries that these two younger generations have really instilled in the workforce, that needs to continue. I think it got a little out of whack at the start of this as we all adjusted to this whole new, whoa, what's happening here? And, let's figure this out. But as we return to the new normal, we're going to see people start to push back on that. Hey, okay, the 12-hour a day thing, that's got to stop. I can't do that. I need some space here, and it's incumbent on us to create that space. If you're in New York City, for example, where we have a stay-at-home order and you're really only supposed to go out to exercise or for essential errands like grocery shopping and drugstore, then how do you, can you get out and take a walk during your lunchtime? How can you pull yourself away? Can you take a meditation class online? There's all kinds of wonderful classes being offered on Zoom right now. Make sure you're getting your exercise class in from your local fitness studio in the morning. My fitness studio now teaches on Zoom. Meditation teachers, yoga teachers, everybody, there's all kinds of these wonderful seminars that you all do. Can I take an hour-long break to just sit and decompress? Because we have to get our minds off of work so that we can be more productive at work.
Thank you, Joanna. Those are amazing points and very well taken as well. I think that, there's such a unique balance and an opportunity right now where we hear from the women in our network that, they're connecting with friends and colleagues and family members that they haven't had a chance to speak with for months, because when we're in the moment being busy, we're in the moment being busy. And now all these technologies that we, have discovered that have actually honestly been around, as we know, for a while, women are discovering them in different ways and being able to use them to be able to connect and rekindle relationships and, create different opportunities for conversations. Nisa, I'm wondering from your perspective, in the spirit of the life-work balance, does that also create opportunities for companies to realize incredible value in the services and products that they offer to their end users?
Yeah, those are great points. What I'm seeing a lot of is a lot of online content like this being produced by everybody who was an in-person club or a meetup or a co-working space, or they're trying to pivot into online content to survive, to still deliver value to their paying members. So I think in the tech industry, people were largely used to working remotely and in a decentralized way globally. So it's not that much of a change. There are people who are coming out and saying, well, I've been working from home for 15, 20 years, and here are my tips about how I did it. And that is very true, especially as you mentioned, millennials and Gen Z, but also if you think about working parents, that's a whole different set of challenges because they have kids at home doing online school, maybe or maybe not even, but they cannot work from 7 a.m. to 7 p.m. on Zoom. They have to feed their kids too. So how do you, incorporate that into your routine? Because I think a lot of working parents used to go to the office as a break or to get away, right? And now they don't have that. So companies need to be mindful of productivity and, relaxing some standards there.
We're about ready to go to our audience for questions. So please make sure we're getting a lot of really interesting questions coming in from everyone so far. So please keep it up. I'm wondering, given the fact that you both have, launched successful businesses, you've been investors, you've been on so many different sides of the table, what advice do you have for entrepreneurs who are growing and scaling businesses right now? Have the rules changed from an investor perspective in the sense of what growth and scale means? Will investors embrace a different approach going forward? And what can we learn as entrepreneurs? Or many of us in the audience today are actually, in the process of launching businesses that we think of how to stay fresh and relevant and current in our own careers. Joanna, I'll let you go first.
I think that it's from the angel perspective, right? So the seed stage perspective, it is a very tenuous time for any company to be at seed stage, and then you add this onto it, it's a 1,000-fold, So I think that obviously having grit and stick-to-itiveness, being able to pivot and being able to, stay relevant. I think that your communications and how you communicate are vital. So I'll give you an example. This is not a seed stage company, but a fitness studio that I belong to in Manhattan instantly had to close, right? You can't have people in the fitness studio. And what they did was they went to Instagram Live and they started to teach free classes, 30 minutes only, on Instagram Live. So they kept us engaged. And then within 3 weeks or so, they figured out how they created a system where they could then teach their full class on Zoom with us paying a reduced rate because we're not in the studio. And they were full. And I tried to book a class and couldn't get in. There was a wait list. So they pivoted very quickly. And there's a lot of companies doing that right now. So to the extent that you could do that, I mentioned earlier that I'd spoken with an entrepreneur who was providing back-end business for beauty companies, and she found a way to partner with a bank to provide that to help with the very essential PPP loan process. And she expanded that beyond just beauty. And so she created a whole new vertical for her company literally overnight with one conversation with one key bank. So to the extent that you can be innovative like that and keep yourself relevant, you'll stay in the game.
Thank you, Joanna. Nisa?
I agree with that. Pivoting, flexibility, managing your cash burn, knowing that if you're in the middle of raising a round, you're probably going to have to adjust your terms, and you need to raise for not 12 months, but 18 to 24 months of runway. So I think there will be new opportunities for entrepreneurs coming out of this new reality, and those who can think about second order effects, meaning what else is changing, trigger reaction, this changed, so this is going to change, so this is going to change. The more you can think about second order effects, the better off you will be in terms of your compass and pivoting towards that.
Nisa, do you think that blockchain is ready to be to be taught in schools and public colleges, or is it still far from that?
Oh, it's already being taught in schools and colleges for a while now, actually. MIT, Stanford, Penn, a lot of schools that I'm aware of personally are offering it. And also there are a lot of free online classes now, post-pandemic, that have gone up because it is so important for people to learn. So I encourage anybody with extra time to sign up for one of those classes.
Thank you. We would love to share 3 resources of yours that we will be sharing on our newsletter later. Your article, your podcast, and then if you have a resource of one of those free online courses, please.
Oh, absolutely.
Thank you.
All right, so now we're moving to questions from the audience. A lot of questions about blockchain. This is fabulous. Okay, so one question from our viewers, can blockchain substitute cash flow? And can blockchain help to solve privacy issues that we're seeing now around how people are using technology in the moment of COVID-19 and beyond?
So yes, I don't understand the first part about cash flow, so I'll answer the second one on privacy. So I think this is a really interesting area in terms of self-sovereign identity. What you're seeing now in a crisis is people are willing to give up some of their privacy in order for more beneficial healthcare results. And typically in crises, that's the case. And then people later on, after the crises subsides, they maybe regret some of their freedoms that they gave up. Now this time around, we do have blockchain technology, which allows for more privacy and allows things to be tracked without knowing, or transacted without knowing who the other party is on the other side. It's based on mathematical equations. So I think that a lot of data is being gathered and then de-identified and then input into blockchains, and that allows for massive, tracking of supplies and cases and all the daily statistics that we're reading about the pandemic.
Thank you, Nisa. Joanna, do you have anything to add for this one?
On blockchain, no. Here's what I'll say. I have been one of those people who have taken many classes on it so that I can understand it, because I know it's coming. I know that cryptocurrency is coming. I'm certain of it. I was at Lionsgate in corporate communications back in 2017 or 2018 when we started to take payments online using cryptocurrency. So I think that we will definitely see a shift to digital currency in this country in the not so distant future. I do think that we have a challenge with the unbanked population, which is a little less than, it's about 20 million Americans, I believe. That is a significant issue that needs to be overcome. It's important. We tend to be very focused on each coast with what we know and with but it's important to remember that in the middle of the country, there's still people who use over-the-air television. There's still problems with access to Wi-Fi and to broadband. So we're not entirely there yet, although I do believe this situation will help propel us there.
I just want to add to that in that a lot of these monetary instruments were created to bank the unbanked. A lot of this technology only requires the use of a mobile phone and not necessarily a bank account. If you look at Square app, for instance, that is how a lot of people are getting their stimulus payment to them through Square app on their phone. If you look at other countries, if Facebook's Libra was created to bank the unbanked, so they say, and that is an area also where people champion, this is the moment for Bitcoin. So there's a lot of different competing products in the market right now, but a lot of attention is being paid to the fact that you need to help get money to the people who need it most. And that is, again, why the bill was raised in the stimulus package, is in terms of not being able to mail checks to certain people.
As a part of the stimulus package, are there things that women, either corporate executives, business owners who are thinking about now or have gone through layoffs or being furloughed for themselves or having to do this for their teams? It's a tremendous time of stress and uncertainty and just a lot of confusion in the sense of from day to day, week to week, what's happening with just the ways in which things are reported. I'm wondering that, given the fact that many of us are in those positions right now, either as a corporate executive, an owner or a founder, or a funder, Are there specific new things that have come out with as it pertains to the stimulus package that either of you think that we should know about?
I think that I'll touch on it briefly. You know, there was a report this morning that the small business loan is now officially run out. And so that's obviously for small businesses who were not able to get funding in time. That's very challenging. The PPP loan has had tremendous challenges depending on what bank you went to. Certain banks just were not able to figure it out as well as other banks. Having said that, the unemployment laws in certain states became much broader. The ability to collect unemployment became, as a freelancer, for example, you didn't have to have proof of being fired from a corporation. You simply had to say, my well dried up, my business went away, and you can receive unemployment. So that is a loosening of those rules that's important to know as people move forward. And also, having said that, it's something for business owners to look at. If you're having trouble, if you need to preserve that runway, if you need to hold on to your dry powder, basically, does it make more sense to furlough your employees and allow them to collect unemployment as opposed to continuing to pay them, and as well as furlough yourself? So those are all, I think, important things to look at. I'm sure Nisa has a much more granular look into it, though.
No, I think you summarized it well. Those are the main points, I think. The only thing I would add is that there was some debate about, I think, hedge funds who were claiming to be small businesses and taking some of the money away from other kinds of small businesses, which I thought was really an interesting ethical dilemma in terms of whether they should be allowed to do that.
Here's another question from the audience. So as of this morning, we know that 22 million Americans have filed for unemployment in the last, three-ish weeks. And yet the Dow seems to be more or less back on an upswing. And from a consumer confidence perspective, how do we as individual consumers and investors make sense of what's happening right now from an economic perspective?
I would love to speak to the psychological aspects of the Dow Industrial Average, because to me, as someone who is in the market, who studies the market, who watches it years, so I would say that what we're experiencing right now is a psychological shift. I think that when you talk to money managers and people who are in the market, and I have many friends in New York City who are in that sector, what they'll tell you is that the downfall has been baked into the current stock prices, meaning that the reaction was so swift and so severe that the stock prices have already taken into account the losses for a year or so, right? And so as we're starting to see a potential easing of this stay-at-home order and business getting back to usual, people are becoming more bullish about how companies will come back. I do believe that it is as much of a psychological reaction as a monetary one. I think that traders were so relieved that they sort of jumped back in. We're also seeing some profit taking, right? People who can afford it, people who can afford the risk, again, the ones who have the money to do it, consider this a bottom or somewhat close enough of a bottom that they want to jump in because stock prices are really good right now. For the regular everyday investor, for somebody whose 401k is in there, this is absolutely not a time to play the market. Don't get out. If you have the time horizon, meaning like if you can stay in the market for another 15, 20 years before you need to pull out, just hold, sit it out. Because the thing with the market, and you can Google this, there are done a lot of articles about it. If you missed just 5 days or 8 days, or 10 days, depending on the study. If you just miss 5 to 10 days in the market, the difference in your return is as high as 40% for those 10 key days. So the advice is, if you can stomach it and if you can financially, hold right now.
Great advice. The market is a forward-looking tool. So I think most institutional investors feel like it's already priced in, and the government stimulus is being swift and taking the right steps. I've spoken to a lot of institutional investors who do feel that way. And again, it's two different worlds between Wall Street and Main Street. And that's what you're seeing.
Let's go back to a second to our conversation around brand survival. And we have a couple of questions from our audience related to just how brands are going to come out of this on the other side. So we know, for example, retail and everything from co-working to the sharing economy to travel has been totally disrupted. And wondering for those companies who are a part of each of those verticals, for those that will come out on the other side, what do they need to do differently in order to set themselves up for success and profitability once we go back to the new normal, or go to the new normal? Joanna, I'll let you take this one.
I think that it really depends on, those are very, while they're related, they're very different verticals. And so each one is going to have to find a way to pivot. As I was saying earlier, the people, Darwin said survival of the fittest. Honestly, in my opinion, in business, it's survival of the smartest who can pivot, who can shift with disruption. And so really what you need to do is take a look at what's happening with this disruption, because it's not just today. We're changing behavior patterns, and we're in the moment of changing behavior patterns. People are going to realize, I don't need to fly to LA or to London from New York to be in that meeting. I can be in it via Zoom. I just did that for 8 weeks, 10 weeks, whatever it ends up being. It wasn't a problem. That is going to significantly shift business travel. So I think that, and that's going to affect hotels, and it's going to affect airlines, and it's going to affect conventions, and it's going to affect all sorts of things. And you bring up, co-working spaces. There are, we're seeing it in China. We're starting to see it in the U.S. Real estate companies that are promoting 6 feet distancing between desks. There is going to have to be more than likely a reconfiguration of office space. But that affects all companies, not just co-working companies. So, and how do we do that, and how do we pivot it? That's what's being figured out right now. And the ones that'll survive are the ones that figure it out and jump on that train. Get on at the front of the train. Don't grab the caboose in the back, because if you have to be the one in the back riding the train, that's where you're going to end up, where your brand can end up not surviving.
Joanna, it was an interesting point that you made around just airline travel, right? And not needing to fly to LA for that meeting, or to fly to Hong Kong for a meeting, or a conference for that matter too. So wondering from your perspective then, let's just take United or Delta or American Airlines. Will they need to rethink the products and services that they deliver to stay in the game?
Absolutely, without a doubt. And you mentioned 3 of my favorites. So I think that what we will see is smarter, more efficient, and different, right? We are already, they're flight patterns, that times that they fly, how many flights they fly, that's all shifting. It's very dynamic. They're doing it right now. They have to. And what do the clubs look like, and what is the offering on the airplanes, and what is even the configuration of the airplanes if you need to keep people further apart? Little known fact, since we're talking about airplanes, is that the circulation system on an airplane is actually the same standard as the circulation system in a hospital. It is actually very safe on, American, on United, on Delta. So, but what does that that physical distancing look like on the aircraft, and how do they have to reconfigure? So, yeah, I think we're going to see a lot of changes, absolutely. And in my opinion, my personal opinion, I think change is exciting. In my book, Culture Shock, I write about how people are hardwired to resist change. I won't go into it now because the explanation is too long, but we are literally neurologically wired to resist change, which I think is some huge cosmic joke, or biological joke, because all we experience in life is change. So to the extent that you can allow yourself to let go and to go with the flow, and all these types of sayings that you hear, they're very self-helpy type sayings, but they stand true right now, to embrace the change and move with it. That's where those are the brands that are going to thrive.
We have time for one more question. This is so fascinating. So from a brand survival perspective, and as it pertains to consumer behavior, how do you actually predict now what consumer behavior will be like in the new normal? And is it smarter to predict it or smarter to react to it when predictions can be wrong, but reactions yet late are those that are correct?
That is an excellent question. And there are very smart people at companies like Deloitte and BCG and McKinsey and EY trying to figure that out themselves right now. I think that with any modeling, and actually, interestingly, I've been listening to New York Governor Cuomo a lot recently. He does a daily briefing every day. He's very good crisis communicator. In fact, so good that I've written a quick book that I'm going to self-publish on shortly called Communicating During a Crisis, Influencing Others When the Stakes Are High. And I use him as an example, and Fauci, throughout the book. Having said that, the need to pivot quickly, the need to predict what's happening, you really can't. You can take your best educated guess, right? And that's really all anybody's doing, is taking an educated guess. And you can head in that direction, right? And as you head in that direction, be smart about it. Take a look at what's happening. Are people responding? Let me go back to the example of my fitness studio, right? They started to offer online classes at a reduced rate. They instantly had a wait list, so they started to add more classes. Had they not had a wait list, I guarantee you we would have seen fewer classes. They might have reduced the price. Like, it's that ebb and flow that you have to be smart about. But absolutely, you do need to do some statistical modeling and educated guessing.
Nisa, from your perspective, then, how do the points that Joanna just raised impact the markets, impact what we see either from companies that are listed on the stock market to just how investors and entrepreneurs think about shaping and molding their businesses for the future?
So if you're investing in consumer companies, it's always been a challenge to change consumer behavior, to offer something that requires them to change. And now for companies that were doing that, it might even be easier because a lot of things, like Joanna said, are now accelerating. They were already changing, but because of who moved my cheese and all this fear, people didn't want to let go of the old ways, even though those old ways might have made them miserable. If you think of all the complaints of business travelers. So I think a lot of good change is going to come out of this because it was forced on everybody, right? It was like this forced pause that allowed you time to think about, was I really enjoying the way that I was living? Was this meaningful? I've seen some memes going around about the planet is, protesting how we were treating it, right? Like, you take it to that extreme. You take it to, so I think if you just start to stop and think and observe, again, these second order effects, that's going to be where the consumers are going to.
But don't you feel that at the end of the day, I feel that for the past 2 decades, there was a change that was supposed to happen in consumers' behavior to technology, retail, and we've all been kind of resisting that shift. And now that we're forced, it's just that overnight we're shifting into what we should have shifted in the past decade.
Well, let's take retail. That was already happening, right? Most of the businesses were going towards e-commerce anyway. A lot of stores were closing. And now you just have that accelerated effect of that. If you look at gaming, a lot of people were staying home and playing games anyway. Now the numbers are through the roof, obviously. So these are just examples of behaviors that were already happening.
Thank you so much. This has been such an incredibly brilliant conversation. And I don't know about you, Neza, but I could stay here on this live stream with everyone for the rest of the afternoon having this conversation, because there's so much more to talk about. We would love to have you both back, Lisa and Joanna, on an upcoming episode as well. And I just want to say, you know, as we're talking about staying fresh and relevant and current and pivoting fast and being able to be simultaneously predictive, but then also reacting to what's happening in the world around us, we're realizing that, you know, for companies like ours who are dedicated and passionate about connecting women to each other and to the companies and causes and institutions that champion equity for women, you know, many of you know us as a main producer of live events in the New York City area for professional female executives, entrepreneurs, and business owners. And under Neza Alawi's exceptional guidance and vision and experience, we learned very quickly how to pivot to this new world. So it's been incredibly rewarding for us, because in the past we were hosting up to maybe 3 or 4 events max every month. And now I think, Neza, we're up to 7 or 8 events every week. So here we are, you know, given this incredible opportunity to simultaneously be forced to learn about all these new technologies, or new technologies maybe to someone like myself, but then also to be able to share platforms and bring wonderful women like Joanna and Neza and Nisa to the stage to be able to, you know, share their experiences, as, you know, we've all sat on the table in so many different ways. So Neza, thank you so much for doing everything that you're doing to champion professional women in the workplace.
Thank you, Jan. It's, you know that I always say that it's something that I wouldn't have been able to do without you, without the rest of the team, but also without our guest speakers who join our conversations. And I would just like to add that everything in Mayshad is about disruption. And what you were saying, Joanna, about change, clearly the world is constantly in change and in movement. And yes, everyone is resisting that change, and we are totally embedded in the values of Mayshad in helping women in that reflection to be at the front row of the new future every day, rather than to be at the back. All right, thank you so much. It was such an exciting conversation.
Thank you, everyone. And please, for all of you out there, please join us at joinmayshad.com. This week, we've announced our new membership package as well. So love to have you take part of that and join us as we grow together and create and innovate and stay relevant. Thank you so much, everyone. We'll see you next time.